Well, the question is whether, look, it's not like the Apple threat is out of the blue because the president has been talking about it. Steve Kovach joins us now. I don't know if we need to get our screwdrivers out again because we had tucked those away, figuring that wasn't going to happen. But here we go with the threats again. What do you make of it today?
Yeah, a massive escalation, Scott. I mean, last week you had President Trump in the Middle East on that trip, bringing almost every day, mentioning Tim Cook's absence there, calling out Jensen Huang as his new favorite tech executive. And now we're saying he has a little problem with Apple building all those iPhones in India. Well, now that little problem is becoming a very big problem with 25% threat of tariffs on those iPhones made in India. And now we get to have that conversation again. How likely is it or possible or feasible is it for Apple to start building iPhones here in the United States? And the answer, like Farmer Jim was just saying, it's kind of farcical here. We just don't have, one, the labor force in which to do it. Tim Cook has spoken about this, that the Chinese labor force and now increasingly the Indian labor force is capable of doing this. We don't have hundreds of thousands of workers here that we can move throughout the country like they do in China and India to start building those iPhones. So what are the options here that Apple has? And everyone right now is saying, well, I guess they could try to eat these costs or raise prices. That's already been kind of floated in a Wall Street Journal article. I believe it was last week or 2 weeks ago that maybe the next lineup of iPhones will get a price increase, likely due to tariffs, but they can, give whatever reason they want for that. And then also, Tim Cook is not stopping with India. There was a headline overnight from the Financial Times, $1.5 billion being invested again into India for a Foxconn plant to just expand that footprint even bigger. Remember what Tim Cook told investors, Scott, just a few weeks ago on that earnings call, saying we're going to move as much production from China to India as we can for those U.S. iPhones. That's approximately 65 million of those a year. They're not there yet, but again, that spending is going to get them there. And then Vietnam is going to be the source for things like accessories and MacBooks. So that is not the United States. It doesn't seem like it's going to happen. Now, the question for investors to really think about is how serious is the president on this? He's already backed off numerous times and flip-flopped on this issue numerous times after saying there are no exemptions. Then he gives Apple an exemption after Liberation Day. And so really it might be just a kind of wait-and-see thing here, Scott, to see if the president really means what he's saying here.
I mean, Dan Ives today calls it a fairy tale.
Yeah.
Sort of your idea, the idea that iPhones are going to be produced in the U.S. And Wells Fargo takes a look at this, Steve, and says that Apple would have to raise iPhone prices by $100 to $200.
Yeah.
I don't mean to sit here and spend other people's money, obviously. But $100 to $200 increase in price is not exactly the $3,500 price tag that we've heard bandied about by the skeptics and the critics of all of this. If Apple actually did raise its phone prices by $100 to $200, you do have the carriers involved here too to think about, and whether that would hurt demand in any way for a premium product.
Exactly.
I don't know.
Just math the math out here. If you're Tim Cook this morning looking at that True Social post from the president, you're saying, 25% for those U.S. iPhones or 100% for a U.S.-made iPhone. Which one are you going to choose? And to your point, that is exactly right. And that's something Apple's been doing for many years now. Either these trade-in deals that you get from the carriers or Apple itself, or these kind of buy now, pay later plans. You can finance any Apple product pretty much, not just the phone, through Apple itself and do a buy now, pay later. They have a deal with a firm in order to do that as well, 0 interest, and make your payments over time. We've become used to that. Yes, sure, the sticker price might be $1,000 on an iPhone Pro, but you don't pay that. Not everyone is paying that right off the bat. So this might be something Apple feels like they're willing just to take the hit on margins and things like that in order to do it. We already know they're going to do it this quarter, $900 million charge related to all these tariffs just for the June quarter. What that looks like beyond that, who knows? We'll have to wait for the next post from the president.
Yeah, we're 2 weeks from Monday. You and me are going to be sitting together out in Cupertino as well at WWDC. Supposed to be all about the developers and AI and everything, but this is the overhang, and I suspect we'll be talking about it a lot between now and then. Steve, thank you. That's Steve Kovach back at our HQ. So we're below $3 trillion in market cap yet again. for shares of Apple, below 200 bucks. 8 straight down days would be the longest streak since January of 2022. Kevin, what do I do?
I think you hold Apple here. I don't think it's going to skyrocket in the next few days.
I blow this off? Just what do you think?
I wouldn't blow this off short term, but Scott, what I'm more worried about intermediate and longer term is what happened yesterday with OpenAI, ChatGPT, and Johnny Ive. Because the Guardian said it best. They said that the next great iPhone moment may not even come from Apple. Because if they're building the next generation of hardware that we can use this ChatGPT product and bypass the phone, to me that's a lot more scary than a threat on a tweet for 25% tariffs made in China.
Can I ask Kevin a question on that? Kevin,
by all means.
Okay, so you think you hold Apple. What do you think if you hold Apple in an IRA versus a taxable account? Because everyone who has it in the taxable account has a huge capital gain. So you kind of need it to go down 15 to 30%, right?
So I never let the tax tail wag the dog.
Okay.
It's irrelevant in all of my thesis because it just comes down to math. But certainly in an IRA, you know me really well, I would want to write covered calls against it actively because you have no short-term capital gains in the IRA. We do the same thing in taxable accounts. But this was a stock that we sold out in December around 247.5. It was too expensive. Last month on April 9th, we bought it at 177. So here at 200, I'm still okay holding it. But for your clients that have low cost basis, I think writing covered calls or at least putting in stops, paying the tax is better. Think of NVIDIA when it was 150 and went to 88. No one sold it because no one wanted to because of the tax consequences.
But if I could also just opine on here, I mean, maybe expectations just need to be brought down for Apple in general. We had that period of time through 2021 where it annualized at 45% annual returns. Remember this for like 3-5 years? And since then, it hasn't had anything. I'm looking at the 3-year return. Well, okay, 3-year return 10% annualized below the S&P 500. But what if it just grows at the S&P 500? And it should because of how representative it is in the passive ETFs. Whether it's below $3 trillion or not, it's still a huge part of the VUs, an even huger part, the SPDRs, an even huger part of the triple Qs. So as money comes back into this market, it automatically goes to Apple. I think it's a touch overpriced. We've obviously seen the AI hasn't come out the way it should. The super cycle has been blown off, appropriately so, but it's still a major part of the U.S. market. And as the U.S. market goes, so will Apple.
Yeah, but why would you pay 28 times for mid-single-digit revenue growth at
This
best?
is where I'm at.
That's the thing, right? The one thing they do really good.
You don't have to.
They do really good. I don't own a single
No,
share.
it's a good question. Let her finish.
My point is that what they do really well is gross margins and margins in general. That they do very well, exceptionally well. But you're running revenues in the mid-single digits at best. iPhones are actually declining year over year. China, iPhones are 20% of their sales. So you have so many headwinds, and it's traded 28 times. I mean, I just think out of any other Mag 7 or any other technology name, there's just so many other things to choose from.
This is more than double what the valuation used to be.
Yes, right. Yes.
When you back out the cash, obviously. We had a mid-low double-digit PE on the stock.
You mean like 10 years ago?
Yeah.
Yeah, but I mean,
Yeah.
they have still a mountain of cash. Their revenue growth, to Steph's point, has slowed.
You know, I brought this up the multiple yesterday. We talked about it because you remember like 10, 15 years ago, it traded at like 11, 12, 13 times earnings when it really was a consumer products company. I thought about this in the last 24 hours, and the big difference here is the services. I mean, the margins there are meaningfully different.
25% of revenues, though.
I'm not going to over applaud the stock. I don't want to give you that impression. I mean, the reason to be in it is more technical than fundamental. Stephanie, I will agree with you. I don't like it at 28 times. But at the same time, I submit to you that I do think it's going to go up, at least with the markets, because of the reasons that I mentioned.
More technical than fundamental. I mean, let's not act like, you know, this company is dead in the water. They still have the most powerful installed base in the history of consumer products.
You're right.
By a lot. And then if you add the services business on top of all of that, the notion that they're just not going to get AI right enough to have a larger upgrade cycle, I think is a bit far-fetched. No? Why do you own the stock at all?
You know, I owned it.
Sounds like you don't even like it.
I know. It's just a sort of valid question because I'm asking myself this. But do remember the trajectory here that I was underweight for quite some time. And in the downturn in April was when I built it up. I bought more shares at 189. Now we're just barely above that now. So believe me, I'm not patting myself on the back. And Stephanie, believe me, I hear you on the multiple. I'm not coming back to you and saying it really is worth that. What I am saying to you, I'm not so sure they get AI right, okay? I think there are a lot of threats out there, just like we've been talking about threats with Google. I got it. But I do think there are still quite a bit of intellectual property there at Apple. They have a long history of innovating after the fact, of catching up with innovation. I think it's more likely than not that they will do that. And when I say technical, I know it's the third time I'm saying it, but when money flows into the markets, it's going to flow into Apple.
And see, that's where I disagree with you, because the market's flat on the year and Apple's down 21%. So it's not necessarily true. And I think your argument is largely predicated on that it should participate with an S&P-like return, and I think that's the dicey part of the argument. So for me, because I don't do covered calls like Kevin, so I don't have that option to make it work and make it productive for me, I look at everything, and I like this conversation because it's representative of way more than just Apple. It's representative of all the Mag 7 that people are sitting on.